You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Kaboom! Kevin Green is back. Kevin, I heard you and I talking before the show. You went fishing. How was your vacation, man?
It was pretty good. Very relaxing. Lucky to have our sabbaticals there at Schwab. Every 5 years, we get a month paid vacation. So kind of relaxed for the first week or so. Got away from the markets, did some fishing, did some camping, did a whole bunch of stuff. So glad to be back. You know, kind of sad to be back a little bit, but glad to be back. And of course, you know, Stephen, markets got to sell off the day before I come back. So at least it made it a little bit exciting today to see some nice green on the screen, to say the least here.
Yeah, good point. You know, look, the market's going to be frothy going into a lot of this in the summer. And we know that the summer doldrums are usually lower volume. We've had pretty good volume. And I think one of the things that you're good at, and many things, but is earnings season. And we're right in the thick of it. Palantir just came out of the earnings, beat on the top and bottom line. NVIDIA just a few minutes ago just said that I saw the news that more than half of their employees at NVIDIA now have more than $25 million war chest. They're worth. Talk to me a little bit about the Mag 7 and the AI and tech. What's going on?
Yeah, obviously, last week we saw some weakness, and it's not surprising, right? We saw a lot of consolidation over the last couple of weeks here in the market, very small moves when it comes to realized volatility. And when you're looking at implied volatility, it's really cheap as well. We were sitting in the 14 handle for the VIX, which it's, once again, kind of easier to re-rate higher than it is to re-rate lower. We had Apple and Amazon earnings last week. Let's just say that they were maybe a little bit disappointing. And then obviously Friday, we had that labor report. So we saw some pressure when it came to the Mag 7 and the broader market as a whole. But today, once again, that snapback or that buy the dip mentality really crept into the marketplace. We were able to recapture that 20-day moving average. You had the hype from Palantir after the close regarding artificial intelligence. We also have AMD and I believe Supermicro this week as well. So we'll get some more AI news. And Palantir just as a whole, once again, does a phenomenal job when it comes to the fundamentals of this company. There's a lot of analysts and a lot of speculators and investors and traders out there that do question the valuation of this name, but you cannot question the growth rate that we have seen, not only when it comes to the U.S. government contracts, which continues to see very good growth on a year-over-year basis, but the commercial side of the business is really where you're seeing a lot of enthusiasm. They saw U.S. commercial revenue growth growing by 93% on a year-over-year basis, 20% on a quarter-over-quarter basis. And Stephen, the last thing I will say is not only just the dollar value, it's the new customers that really surprises me every single quarter. They close over 157 deals with at least $1 million for that total contract volume. And they continue to see, once again, just remarkable growth on the U.S. commercial side, 222% growth year over year when you're looking at total contract volume just on the commercial. So they're doing it. They raised their expectations. I was saying this on the network earlier, because everybody really wants to see this, you know, a massive 15, 20% move after hour. This is a company now that's gotten so big and everybody plays the options on this name so much now that it's harder to really try to squeeze this, get a nice little gamma squeeze to the upside, right? Because market makers are really trying to get prepared for really good earnings. And it seems like they are, for the most part, battling this implied move that we are seeing right now, but a phenomenal number. Hopefully that gives us some enthusiasm to try to get back to new all-time highs here, hopefully by the end of the year.
I had to look at Palantir. I'm looking at it now, looking at my numbers, and Palantir now at 168 here in the after hours, 4.58% to the upside. What did analysts on Wall Street miss? Why did they miss the AI boat? Why are they now playing catch up and going, ooh, okay, I now understand AI. I'm Apple. I'm Tim Cook. Okay, we had to be in the AI world. What did Wall Street, Main Street, why does everybody feel like they're playing catch up now to AI, that when you and I have been talking about AI for years now?
Yeah, you know, retail was not wrong.
Right.
Look, they were the ones that actually called this, especially a lot of these speculative names right now that have been able to prove themselves, right? A year ago, when you're talking about a Palantir, you kind of has a little bit of that meme stock flavor to it, but they have been able to back up the valuations here. And I think what actually has taken so long is just like with every growth cycle. And Stephen, you've seen the internet boom. I won't even say bust. Internet never busted, but companies busted during that time, right? You have this frothy type of market, IPOs for names that did not have any type of structural products that they were selling here. And I think we always underestimate the rate of change when it comes to technology, and artificial intelligence is the same way. Look, I don't really talk about Grok that much. I don't use Grok that much. But when you're looking at the incremental improvements that you're seeing on a release basis, every month, every 2 months, it is very remarkable. And now you're starting to see that tangible addressable market really just explode exponentially. And from an analyst standpoint, if I can give some insights to your viewers, because you're right, analysts were late to the boat. I don't want to say they're wrong, but they're late to the boat. What makes it very tough as a Wall Street analyst, and you know this, when they put out these price targets, they have to have some meat and potatoes behind it. It's very hard to have a very extreme price target on a stock without being able to justify the valuations. And a lot of these major companies, these major investment firms, they do have risk parameters in place when it comes to valuation metrics like price to sales, price to equity, right? Price ROI, things of that nature. So it makes it very difficult, which also can kind of handcuff them a bit when it comes to their price targets. But they might be a little bit late. We might be at the beginning stages of this thing still, just like the internet boom. And we are seeing a lot of this come to fruition. The scary thing about Palantir, I want to see scary, because there is a cohort, and I understand a cohort of individuals that are a little bit concerned about the privacy aspect of their business, especially when you're looking at it from a government surveillance standpoint. But we're talking about money. And when we're talking about money and you see a growth area or opportunity in the market, you can choose not to participate, and that's perfectly within your right, but you could also lose alpha doing that as well. And I think that's kind of where we are at in this game. Palantir has cornered a significant portion of the market. And even if you're looking at the surveillance side, not even just looking at the AIP platform just in general, but when you're looking at defense, when you're looking at, once again, surveillance and things of that nature, you can't deny that they are becoming and have been a cornerstone in this business for the last couple of years here. And that trend probably is not going to change anytime soon. Maybe the rate of change when it comes to the stock appreciation might decelerate over time as things become a little bit more mature. But from a product standpoint, they're hitting on all cylinders here. And this is a company that not only has the retail investor enthusiasm, but you are starting to get a lot more institutions getting interested in this name and at least nibbling a bit when it comes to the exposure.
Yeah, that's a very good point, and thanks for laying that out, because I think a lot of people don't really realize that sometimes when the Goldman Sachs and the JP Morgans and even some of the niche analysts, when they come out and talk about these stocks, and you look at them and you go, wow, they just raised it to a buy rating, and here's the reason, but my God, they just raised it by $400 a share, right? Why? They had to lay that out, and I think they've laid it out for Palantir, but at a PE ratio at over 300 now, are we still in the ballpark here? I mean, it just seems that Palantir's above its skis a bit.
Once again, it depends on the metrics that you're looking at. For this company here, I still believe that it's a growth company, and a lot of growth companies, you don't really value them on a price to earnings multiple just in its own right. You have to look at bringing on these new customers. What's that rate of change for the dollar amount or the dollar values when it comes to these contracts here? And that's really what you're paying for. You're not really paying for the E portion. Mm-hmm. You're paying for the growth. You're paying for that top line growth. And eventually it'll all settle out in its own right. What you want to see for Palantir over time, and they will do this, just like any I'll call it a subscription business in a sense, right? There's a consumption model that's being built into this, but you're bringing on new contracts in the hopes that you're able to integrate so much into an enterprise that they can't leave, right? It's the Oracle type of effect. It's the Microsoft effect. And once you're able to kind of annuitize that business on a year-over-year basis and getting that steady stream of income based on that consumption, that's when you're going to see that earnings multiple really drive. That could be 5 years, 10 years down the road, but sometimes you can get so integrated with the company that you have that pricing power to say, hey, you know what, we're raising fees. We're raising fees again. Microsoft does a phenomenal job doing that. on an enterprise basis, at least. Maybe not when it comes to like gaming and things of that nature. And so that's what you're hoping for. But this is a growth company for right now, and you're looking for new customers. You're looking for new contracts.
Yep.
Yeah, you're looking at back orders of deals or the backlog of deals. And if that continues to incrementally move higher, then I think the street's going to pay for that until something happens. You have a credit event, you have a contraction in liquidity for whatever reason. That's when you start seeing institutions kind of selling off some of these higher multiple names, going back to their core bread and butter favorites of the world, right? The Apples, the Googles, Microsofts. But we're not in that environment right now. And they have they have a niche, that a very scary niche in some respects. You know, when you kind of look at some of the, you know, I've been talking about my vacation. I did a little bit of a deep dive into Palantir. Not so much, once again, the commercial business. It is what it is. But how they're able to integrate their technology into defense, and automating strike plans, right? Like it's remarkable, and it's scary at the same time. But if they have that type of technology, it's going to be in demand. So at the end of the day, if they're able to pull this off, you kind of have to ride that wave until that wave breaks. It hasn't been breaking anytime soon here when it comes to the top line growth. And as long as the multiple kind of holds up, or not the multiple, as long as the price kind of holds up, price is king. Multiples you can be concerned about. We've been concerned about the S&P 500, S&P 500 forward multiple for the last year and a half. Yeah. No one cares. I mean, at the end of the day, market continues to ride higher. We're at a 23 and a half, 24 multiple.
Yeah, I don't understand that. The chasing the markets here, but okay, let's flip the switch just a little bit here. Actually, a lot. I'm going to have to ask, not politically, but you know, you and I have been in this markets a long time, and I have to ask. We live on one word: clarity. We need to have good quality, strong data from the government. And I know the big question everybody's been asking a lot, and let's ask it to you: labor market, BLS, Bureau of Labor Statistics. I love that office. I've been in that building several times. Very hard to fudge those numbers. They can't really do it very easily. But yet, over the last few months, you've seen the numbers being really changed. Those corrections have been very big, and they've been to the downside. President Trump's been very unhappy about that, and then did the inevitable, which he fired the director of the BLS. Give me a rundown of what the thoughts are, process behind this, and is it really affecting the markets?
Hasn't affected the markets yet. I think if you kind of see this expand more into, let's say, the not only just the BLS, but if you're looking at the Census Bureau, things of that nature, you might get a little bit concerned. You are right. I think there's 2,000 people that work for that organization right now. It's been around for 100 years. And I always, you know, I'm a student of history. And usually if you have like 3 or 4 people know about a conspiracy, you don't have a conspiracy anymore. It's going to leak to the public one way, shape, or form, right? And it's very hard to.
Yeah, you got me tickled on that one. That's a good one, right? Because you know, in DC, we don't believe in conspiracy theories because we were a bunch of the ones that were there. We know they were a conspiracy. But you have to look at it from the perspective of the government. Faith in the government is waning even more. Trump did that in the campaign, and now here we are, and he's literally fired the director of BLS. Is that shifting the faith here? More government?
I'm concerned about it, but the market seems to be shrugging it off right now. And so this is where, look, if you're a trader, you're going to have, you know, personal dilemmas all the time in this market. Do you invest in this company? Do you not? Is this the right way to go? But at the end of the day, politics doesn't make you money. Dollars and cents and price action and volume really makes you money. So does it make it a little bit more of a concern? I personally think so. But at the end of the day, no one cares what I think. And it seems like the market has been able to shrug this off so far. The fact that the numbers have been fudged or what have you, I don't think that carries any merit, but that's my opinion there. The strong revisions, because I want to kind of pivot. I don't want to get in trouble. The strong revisions, we have seen this happen in the past, and they have been aggressive. And what's actually very interesting is this time last year, Steve, and the same thing actually happened. This was around the time where we got very bad revisions, and the Fed cut 50 basis points. Right in September, it was either September or October. So you're going to see the same thing right now. So let's talk about data, dollars and cents. Let's talk about facts here. The July report is usually a weak one. The June report obviously was weak, which we obviously got in July, or we just got. The July report is generally weak. August, I'm going to tell you guys, gets weaker. And that's where I find it very interesting here, because in 30 days from now, when we have the next report coming out, generally the August report is really not that great. And then in September, you see a massive re-rating higher almost every year. And for two reasons. You have back to school. So you have the education and the state government jobs for a lot of states moving back higher. And then you also have the preparation for seasonal work going into the holidays as well. There's also going to be some residual effect when it comes to construction jobs. You start seeing a lot of construction companies really trying to push forward through and completing projects before the winter season hits. So September generally becomes actually fairly strong for that report, that September report, which will come out in October. So there's some seasonality effects to this as well. And what's also very kind of interesting, and I think that we're going to have to get used to this dynamic, we also have an immigration adjustment in policy as well. And I believe the BLS, when you're looking at the participation rate, believes that there's been a million jobs from the immigrant standpoint that have been kind of taken out. So you're going to see a distortion when it comes to the participation rate. So basically what I'm saying is you could actually have a situation where you generate 30,000 jobs a month, which is fairly low compared to what we expected. You could have 30,000 jobs, 35,000 jobs being added on average a month on a 3-month rolling basis. And you could still have an unemployment rate of 4.2%. Because labor is still actually in some sectors actually drying up.
But is the
there
Fed
a concern out there? There is. But
is the Fed thinking about that? I mean, they're saying that 2% is they need to have 2% inflation. They need to have these unemployment numbers coming down. And yet we've got a Fed member that's quit. We've got a Fed chair who Trump doesn't like now, I guess. He liked him in the beginning, but doesn't like him now. I'm seeing all these factors. Powell came out last week and said, everything's fine. Labor's hot. Can't do anything because I don't know about the tariffs. But yet we're going to see this week, we're going to see Disney. We're going to see Uber. We're going to see Caterpillar, McDonald's, all these consumer question marks around their earnings. Labor, Fed, Iran again is back picking up. China is picking up, and yet the traders are kind of discounting this as if no big deal. I mean, am I missing something here?
No, they are. They're buying these dips. I'm right there with you.
Okay.
I think the traders in the market right now are saying, "Show me and prove to me that we are actually really weak." 35,000 jobs is a concern. Yeah, I think that's the slowest rate that we've seen since COVID-19 in some respects. But once again, the labor market is still holding up. We're not seeing negative numbers. That would be your very big concern. You start seeing 45,000, 100,000 jobs on the negative side. Yeah, we have a big problem there. A couple of things I want to highlight. Everybody was hating on ADP for the last 3 months. They called it.
Yes,
ADP was not wrong. People were laughing at ADP when they had this huge dispersion in the numbers that they reported for private payrolls and what we were actually seeing for BLS. Now we can say, hey, they were in the right track. The other reason why I bring that up too, though, Stephen, ADP actually had a pretty decent report recently for ADP on a relative basis compared to what they've been printing on in the last 2 or 3 months or so. So once again, are we going to start seeing this snap back effect taking place over the next 2 months or so? Look, is the Fed going to cut rates? Yes, they are. Are they going to cut in September? Most likely. I believe Cooks, there was just a Fed speaker that just came out after market close that said, hey, we might actually need more than 2. So you already have 3 on the books that are pretty much signaling towards this.
And you're pulling the words out of my mouth here. Where I was getting ready to ask you. Look, you've got one Fed. She just quit. Powell's going to be replaced. It looks like. So all of a sudden, Waller says, "I'm voting, to cut." What happens if we have an intermediate meeting cut?
I don't think you would.
Okay.
That would be horrible for the markets. That would be horrible for the equity markets.
But we know Trump's pulling for this. So is he going to wait all the way to September? I mean, they're talking about a month and a half away.
They should. Yeah, you pull it. Look, go back in time and look how many meetings that we've had and what the reaction has been for the equity markets in that type of scenario. That's when you're talking about crisis level there. Kugler, the resignation there. I don't think it's I'm going to say it's not a conspiracy either. I believe the previous meeting, she was not in attendance because of a family matter as well. So I think she's already missed 2. If I'm not mistaken. So it doesn't seem like, I know that there was commentary coming from President Trump about, oh, they had disagreements, this, that, and the other. I believe that was a completely different situation. Yeah, I haven't seen I haven't seen commentary coming from Kugler in about a month and a half or 2. So I would probably say let's respect.
What we have from Kevin Worcester, we have from Waller, who knows who they want to cut, right? So
yeah,
okay, here's a fight for being the chair. Who's going to be the chair then?
That's it. Well, this situation with this resignation actually does throw a curveball in,
right?
Because now this is kind of that open seat. He doesn't really need to. He could pick Waller. It doesn't sound like anybody from the administration's reached out yet, but now he could pick pretty much anybody that he would like to kind of set them up. And so I don't know what the relationship is with President Trump and some of these leading economists that are out there. I know obviously he's going to want somebody that's going to be very dovish for the market, but we have to be mindful. Fed Chairman Powell is not the only one that sets rates. He's not that type of an individual, right? He's looking at the general consensus from the governors that are there, and then he's going to go with that consensus. And I would expect that his tone will probably shift over the next 30 to 60 days towards signaling for a cut in September. Be careful what you wish for, folks, because you want to cut. The desire to have a cut and the anticipation of a cut is probably holding this market up more than actually us having a cut.
Right.
When we had our cut last year, that didn't work out too well, especially when you look at the yield space.
Moment of buy the rumors, sell the news.
Yeah, it's the reason for the cut. Do you want to cut because of an all clear, or do you want to cut because we are actually in we're seeing economic stress? President Trump wants to see he just wants to see a cut. Once again, in my opinion, the data that you had on Friday is the data you wanted if you are the White House. You're only 6 months into this whole thing.
Yeah.
No one's going to be really holding you accountable for the economy until March of next year, February of next year. That's really when it matters for the midterms anyway, if you're looking at it from an electoral standpoint. But he has a very different strategy, and we'll see how this all plays out here. But I say, be careful and you don't want to induce an economic slowdown as well. That could also be a situation. People are like, oh, look at these revisions. BLS is so wrong. Mind you, BLS survey data has been very weak since post-COVID, so it's very hard for them to do that. And if you look under the hood, and I would advise people, go to my Twitter page or my X page, KG Bull and Bear. Over the weekend, I posted 2 things. Well, I have 3 things. I have a post that I wrote about an article about just like Q1 thoughts. It's still up there. I never did a Q2, may do a Q3. But look at the Q1 thoughts, because I actually put this situation into those Q1 thoughts. Around this. And the reason why I did that, the Federal Reserve Bank of Philadelphia, Philly Fed, they publish these outlooks, and they're not even outlooks. Basically, what they do is try to project employment statistics moving forward based on initial claims data and some other statistical data here. But what they also kind of call out, what I found very interesting, and they were literally screaming at the rooftops in Q4 of last year, and they said, the data that you're looking at for employment is going to be skewed not only because of the survey respondents, but what the states are doing. There's so many states that overstate their employment picture, and then they also have to update their information, right? And we have these massive revisions because we have more data that comes in, and we have these, every 6 months or so, we get a big revision. Last year was 818,000 jobs or whatever. Why did that actually happen? Because now we have 95% of the tax receipt data in order to verify what's happening.
Yeah, agreed.
And for New York, what's actually in New York, they basically take New York City data and then they build a whole model around New York City for the whole state. So there's distortions. But check out that Philly Fed note that I posted over the weekend from the Fed. Read it. It's only about 4 pages. But there's a couple of states that are habitual overstaters when it comes to their employment picture of within their state. And that makes it very hard if you are a person that's at the BLS trying to model data it makes it very hard to build out a concrete model when you have such wild outliers from states that probably shouldn't. Their population not even
Would you
large.
add AI? Would you add AI to the data? I've been arguing that we need better quality data. We need better computers there. We need better, obviously better data in general, and streamlining the data.
Yeah. But I haven't seen anything but budget cuts for the BLS in a very long time. Hard to be able to, improve the data if you don't have the infrastructure in place. And then there's also this whole thing of, well, we have so much data now. Why can't we do this in real time? 50%, a little over 50% of all employers in the United States are small businesses.
Yeah.
Do they have access to being able to report on a weekly basis or on a monthly basis?
They do not.
To go directly to the BLS or to the state?
They're too busy doing their business. They're too busy trying to sell. I mean, they don't have that time, right? I agree with you. All right, Kevin Green, appreciate your time. Schwab Network, I mean, he's the man, the myth. Kevin, we'll see you right back here next week, man.
Appreciate you, Stephen. Have a good one.